Now, recruitment industry. We met on Monday, and Ian and Nona were there already. So I presume we're just repeating the stuff. But today I'm going to look at one more company, also just to show you what we discussed during Monday. But basically, this industry has few differences. Like in, of course, it has similarities to other industries, but the difference is that it's very competitive industry and it's really really easy to enter this position. So it could be one person office, one person can start this business. They can start calling to different companies and trying to get their candidates into these companies, and it's pretty easy. I have few friends here in Australia, in Sydney, who started similar type of business because they were out of the job, they didn't know what to do, and they started providing laboring for building site and etc etc. So and this business grew quite quickly, and at the moment they are buying their competitors because they see the potential. It's really really good business if you grow it. Okay, because when it is small, it's very busy business, requires a lot of work. But as soon as it start growing and people put automated system in there, it's the cost of running this business start going down. That's why the bigger the company, I'd say they have higher operating margin, because bigger companies, they can introduce some IT software uh, where people put resumes, screen candidates, etc., etc. So you wouldn't require so many people in this particular company. So, and of course, human resource probably is the most expensive resource nowadays. If you automate something, so it's much easier to kind of to run your business. So that's why if you look at different companies, different sizes. So, for example, if it's under $1 billion capitalization or over $5 billion capitalization, you will see that the bigger the company, the higher margin they have, operating margin, and you understand that it is good for any business if you have higher margin. Now, the next one, majority of companies in the very beginning they grow like organically, but majority of big companies they grow aggressively by acquisition of other smaller companies. So if the company decides to go to, for example, to new market, instead of opening the office and trying to build new relationship with local companies, with trying to promote their company, it's much easier for them just to purchase existing company with already built relationship with local businesses. Okay, so that's the way it works in majority of big businesses. Now, if you know that, you probably understand that if company grows, especially young company, I mean young, it's 5 to 7 years old, and if you can see that the company has really aggressive growth from, and you can see results like sales growth, okay, you might expect that this company growing by borrowing a lot of money and then buying other businesses. So in these particular companies, you wouldn't be surprised to find high level of debt. Okay, and you have to be careful with that. Okay, it's first thing. Second point, it's high intangible assets, because companies are buying other companies. What happens? They always overpay. You probably understand that recruitment industry doesn't have to have a lot of assets. It's probably some computers, some probably if they buy office, it's office, but maybe some software. But in reality, it's the most important human resource, like people who work there, okay, and the connection which they have. And we discussed it, and probably like Ian, you said that uh, if somebody leaves the company, they can take away their clients with them, their connections, and it's absolutely true, right? So from the management and other companies with their clients, management positions, so it would be very difficult after that to replace somebody, because they would have to build new rapport with a high level of management in this particular industry. So that's important to know. So, but when you buy something new, you always buy it with a premium. And that's why all these companies which grow with kind of with acquisition rate, so you understand that they will have a high goodwill ratio, and that's why it's very important when you assess their assets and you assess their book value. You have to be really careful. And today I'm going to show you one particular company which has a negative book value. But when you look at value line report, you will see that it has positive kind of book value, but in reality it is negative. And I am going to show you how it works. And another thing which is very important, and it concerns to any company in this industry, is these businesses are easily affected by economical downturn. So remember 2008, you will probably understand that at that moment, majority of businesses, they are not looking for new employees. Otherwise, they are probably letting people go. And when you see that, and also all these companies, they're trying to cut their cost, so they are not paying high like premiums for finding new peoples, because it's easier to find good candidates on the market because there are a lot of supply of qualified staff. And of course recruitment businesses, they suffer during this time. So that's another thing which you have to understand. And even though the company had a strong position, very qualified personnel, they still will suffer when the economy goes down. And that's why we're going to look at few companies today. You will see that they went down in price quite a lot, and the biggest reason was that it was downgraded, or there was a projection of like bad economical projection for the future, so that within next year 2017 we will see that economy will go down, and based on that people start selling off that stock. Okay.